economist at CICC, the PRC's first Chinese foreign I-bank, is on with us to dissect that. Morning, sir.
Morning.
What's the answer to that question? Are we going to get a dangerous, toxic, poisonous number today out of the PRC?
I think we're going to see pretty high GDP growth figure.
What is pretty high?
For the fourth quarter. Market consensus is about 10.5%.
Right.
I think it's going to be significantly higher than that.
Wow.
Because first, you can see industrial output is picking up, and also the export activity is picking up to about 18%. Mm-hmm. So these two factors, I think, will be driving China's GDP in the fourth quarter to a 11 to 12% range.
11 to 12%. So you're like 1.5, 2 percentage points ahead of consensus. What leads you to that? Why are you out on a limb? Why are you not closer to consensus? There's something in your math that's different than the others.
If you look at the export performance, 18% is way higher than many expected. And also, if you look at the labor market conditions, there are so many areas where labor shortage are getting severe, even more severe than what we saw 2 years ago when GDP grew by 14%.
Are you saying that they dumped far too much fuel on the fire, that they didn't know what they were doing in the effort, to look like they were on top of the situation? They ended up completely overstuffing it.
Well, about a year ago, the same time, the economy, was in a terrible position, and so the government launched a very big program to support the economy. But it's very difficult to control the pace once stimulus packages out. Local authorities are so excited, so they pour all the money to various projects. So what we are seeing is the impact of the stimulus that drove up the economy. But as you can see, the government, starting from very recently, to cool down the economy, their interest rates, the central bank bill rates have been increased, reserve requirement ratio have been increased. So efforts have been made and even stepped up to cool down the economy.
Are they behind the curve, though? I mean, is it so out of control that these little steps, these little signals are basically just like, just like chirps rather than barks?
I think these things are still manageable if measures are not further postponed. I think China should raise interest rates, for example, because inflation, according to our estimate, will reach around 2% in December, and will further escalate to about 3% in the next few months, making the nominal interest rate, the real interest rate, decidedly negative.
Right. Does this mean that that today or tomorrow, they're going to pull something out of their hat? Are they going to go maybe 27, even 54 basis points on interest rates? Is it urgent, acute surgery that's needed right now?
I think there's a rising likelihood of an interest rate hike. If you look at the macro figures, GDP growth above 11%, inflation above nominal interest rate, this is usually the time for a rate hike. And also the money market rate and the deposit rate, the gap is narrowing following the increases in the money market rate recently. Now the gap is about 32 basis points. So every time, when the central bank raised the central bank rate, the size was about 8 percentage points. Okay. So you have four more weeks to close the gap.
That sounds like the title of a movie. We'll continue our chat with Haji Ming.